dollar index trading just off of its lows, but still very, very weak here off of the daily chart. Part of the reason here, part of the predominant reason is yields continue to fall. And if you're not too familiar with studying yields, the bond market trades heavily based off of what the Fed and their monetary policy is expected to be. So if inflation is expected to rise and interest rates are expected to go up, usually you see yields rising. But if the Fed is expected to cut rates and inflation is expected to cool, which is what we're sort of seeing right now, that is a really powerful indicator. If you've ever heard the monologue or mantra, don't fight the Fed, one of the best ways to make sure that you're watching the Fed is keep an eye on the 2-year. 2-year yield gives you a general idea about monetary policy and its path of least resistance. Right now, that would lend us to be, again, bearish dollar, bullish equities, bullish gold, etc. So that's how we'll approach today. I mean, this is, when I say that I talk about, the dollar index very frequently, really I look at the dollar index, but perhaps even more important is the yields. At the end of the day, monetary policy is either with you or against you with most of your trades. If you're trading gold, oil, indices, USD pairs, you got to watch to see what the Fed is up to. It is really, really important. So anyways, trend seems to be lower here on the 10-year. Same thing. We're seeing, a pretty big decline there as well. And so when we take that over to the dollar index, that is, again, a supporting indicator of more bearishness to come, in my opinion. So as we've broken this level of support, if you do get a kind of pullback into this region, overall path of least resistance for me going into the new year is still dollar bearish. I think we could be headed back down to test 100. 100 may seem far away, but again, 100 is this level over here. Take a look. We previously really strongly bounced off of the 100 mark, and I'll go ahead and mark it as, a possible area of interest going into the next few weeks. So longer term possible target for the dollar is that back to 100 mark. We may have some pullbacks in the meantime, but breakouts, pullbacks, that sort of thing, generally speaking, until we see a shift in something from the Fed, that's going to keep me on the dollar bearish side. So with that said, what do we do with that? Well, then when we take a look at currency pairs, if you're somebody watching the euro dollar, I've been pointing out that the idea of a breakout here could be interesting. So if you get a push past resistance, this could be a nice, continuation play. Same with the pound dollar. I do have a pound dollar long trade. Am I still in that trade? Let me check. I am, but barely. Look at this. My stop loss, which was trailed at this red line, just barely hanging on. If that level gets taken out today, we'll be out for profit. Entry was taken a couple days back, several days back, but still holding on to this swing trade. We'll see how that one plays out. Happy to hold this one if it wants to keep pushing, but we'll definitely need to take profits if price breaks support here in the coming days. So yeah, gonna keep a close eye on it as well.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
So I also want to just warn people, if you're somebody new to trading, is anybody really new to trading? Do me a quick favor. Please be honest. If you're somebody new, please let us know. We'd love to, we like new people here. We don't shame new traders. Let us know in the chat really quick. How long have you been trading? Are you somebody who's been trading for 1 month, 6 months, a year? Let me know. Also, here's an update on the S&P trade. It's pulling back here, or it was. Let's take a look. Update on S&P. Slight pullback. I mean, it's not really too much. What's my expectations? Well, I'm going to get into that in just a second here, guys. Let me talk about this. 3 years, 2 years, 3 months, 3 months in March, 3 years, always a student, few months. Cool. 2 days, David FX. Can anybody beat David FX? 2 days? David, are you actually, I feel like you've been doing it longer than 2 days. You have a profile, you have a whole YouTube name, David FX. I feel like that's cap. Who's the newest trader in the room? Let us know. Be honest, speak up, because there's nothing to be ashamed about. Just started a week ago, learning as much as I can. Mom, that's awesome. New traders and traders who have 2 hours. Okay, that might be the winner. Let me say something. Just a heads up for all traders who are newer to the space. This period of the time of year is notoriously a quiet time in markets. Now, the reason that is very important to know is that when you take a trade, there's something called a spread. This is how brokerages make money, right? The brokerage that you sign up with, if you do decide to create a live account, etc., when you take a trade, you want to enter the market. Let's say you want to buy. You want to enter it here. Well, your brokerage says, okay, you want to enter it there. We'll give you an entry here. They'll buy it and sell it to you. And that little difference in price is how a brokerage makes money, right? It's called the spread. Well, during holidays, and this is just a little bit of a tip for the newer traders and people who just want to, a little reminder, this spread widens during the holiday season. Why? Because volume is looser. Like, there's less volume in the markets right now. Think about it from a secular point of view. People are away from the charts. They're spending time with their families. They're taking a holiday, etc. So there's less volume. The point I'm trying to get at is that during this time, be careful trading, because the volatility is much lower, or not necessarily the volatility, but the volume is much lower. And so your spreads are going to probably be not so great. 1 week. That's awesome. I started yesterday. Hey, the truth is, many of you guys and my regular friends, you can probably vouch for this too. Many of you guys won't make it. That's the reality. Many new traders, not to be, I hope that if you're here within your very beginnings of your trading career, I hope that you let me scare you just a little bit, because the Lambo lifestyle, the people holding up MetaTrader 4 with like $5 million in fake profits to deceive new people, that stuff will cause you to be a pitfall. People like me, the negative, scary, pessimist. I'm not pessimistic, I don't think. I try to be a little bit more of like your dad in the trading space. You know how like your dad is like, think about this, son or daughter, The point is, I hope that if you watch my channel, you're going to get a real impression of what trading is. And that is our goal here as a channel. We do not put out nonsense. So if you're new, I do want to encourage you, hit that thumbs up button, hit subscribe. We'll take care of you. We'll teach you some simple stuff that won't lead you astray. We're not here to deceive you or to lie to you or any of that nonsense. Okay. Wait, Dad, is that you? It is. I've been looking for you, son. Don't say that, Nick, I'm going to make it. Hey, I wish you well, and I wish that you will. I'm not saying that you can't make it. Please don't mistake it. It's just that genuinely, when you hear 99% of traders fail, genuinely, it is like 99.9% of people in some point give up in trading, because it is really, really difficult. It looks easy. From the outside, it looks easy. But it's hard. It's the hardest thing. It's one of the hardest things I've ever done to become profitable trading. And I'm not even exaggerating. It is so incredibly difficult. And there's always more to learn. I've been doing this every day as a career. YouTube, we offer services. I've been trading my own money. I've been doing this for 8 years straight, every day, 80-hour weeks. And, it's still hard, and it's still so much learning. So anyways, we're kind of on a rant today because the markets are quieter. I mentioned volume a little lower. Today might be a ranting day, to be completely honest with you. In terms of market setups, I do want to talk a little about dollar yen. Dollar yen did end up playing out nicely. I believe, shout out to H Ballout. I think you were talking about dollar yen yesterday. Seems to be doing quite well. We'll see if that does indeed stay the case. Hardest part is fighting your own psychology, revenge trading. Totally is psychological, but here's another thing that is hard. And I like this is one of my stronger points in trading. Do you know why trading is really, really hard? It's actually way simpler than people might expect. It's not just like, oh, mentally it's hard to like see the swings in money. That absolutely is true. You know what's really hard about trading? Markets are not that predictable. If you watch a YouTube video where somebody's like, oh, well, when the moving averages cross, it's not that easy. Sure, those things can be useful. I'm not saying they're useless. I'm saying markets are not that predictable. If you understand statistics, which I'm not by any means like a super proficient statistics person, but even basic understanding of probabilities, you go spend some time backtesting, the markets are not as predictable as they seem on the surface. That is why trading is hard. It's because everybody with these fancy million indicator or million price action names and nicknames and trying to overcomplicate it, you actually get down to the accuracy and backtesting these things. It's not as accurate as YouTube would have you believe. That's the truth. It's really difficult. And I'm not trying to discourage, I'm trying to warn that please don't go risk a bunch of your hard-earned money. Please stick to a demo account. And then when you feel like you've thoroughly backtested, then maybe it's time to look at it differently. I wanted to pull up gold here. Gold daily chart. Seems like it found pretty good solid support. Broke out, pulled back, found support again. I mentioned yesterday that I really am bummed that I missed the pullback here. I am bullish on gold going into the new year. I think it has some good potential to squeeze higher. Here's a 4-hour chart view. We're struggling here, and I want to caution again, we've got Christmas around the corner. Volume is expected to dry up. I would not be surprised if gold were to do this for the next couple of days, right? If it's just were to trade sideways. You know, if you're thinking, oh, I got to buy it, I got to sell it, you know, you probably have way more time. In my personal opinion, right now, you probably have more time than you think to make a decision because gold is probably going very nowhere. Just my probability speaking here, you have very low volume due to the holidays. Things are really quieting down. We are taking half days for the rest of the week here at A1 after today because things are really quiet in markets, and obviously we're a market coverage company. So when things get real quiet, you know, it becomes a little quieter in the markets, as you could imagine. So in terms of gold, if I am wrong about that, we do get a huge spike in some sort of catalyst. Now, what would happen here? Unfortunately, it would probably be some geopolitical scare, right? Yeah. If we get some sort of big, huge catalyst, then I take a closer look. But it's going to take me something big to really look at gold or oil or anything really right now to enter a bunch of trades. Again, I'm almost trying to just warn people that right now is a really tough time to trade because volume is low. So likely follow through is this like not as likely. So like, for example, if you're looking at gold or the euro and you're saying, oh, I want a big continuation move, I think it's a little less likely. In fact, I think, see how big these candles are? I think you're probably more likely to get candles like this for a while, like quiet, boring candles until people come back from the holidays. Okay. The reason I keep saying this is because a lot of people are going to go out there and just like force trades because now they got a little time to work from home, or they have a little, you know, time before the holidays. They have some free time. Please understand, the professionals have gone home. Professionals who do this for a living, like they do this every day. A lot of them, not all of them, but a lot of them are wrapping it up this week. Tomorrow, Friday, they're going to be done for the holidays. And so the only people who are going to be trading, or a lot of people who are going to be trading, are going to be the retail crowd, which doesn't really have the volume to make huge spikes in the market that last, right? That's going to be your banks and institutional money, moving money, you know, throughout, you know, the euro, the pound, the gold market, whatever. So again, I just want to caution people about that. if you've been watching, I'm currently in my best trade, my record trade, the S&P position that I've been in. But yeah, I'm always shooting to beat my best trade ever. I use trailing stops. So my best trade ever, like I don't expect it to happen in 2024 because I had such an anomaly move here in the S&P this year. Right, we caught it down here, still in the trade. This is a daily chart. We've been in this thing for a month and 20 days. It just has been trailing, right? So, yeah. I read, backtest, and go swimming. Hey, that's awesome. Hey, Christopher, what's up? Full-time realtor, not in the area, or I'd reach out. Property manager and builder, love it, and trade for about an hour or two a day, and it works. Hey, that is awesome. And see, you got something cool to do outside of just trading, right? Realtor work is awesome. Probably a little challenging in this. I've got some friends who are realtors as well. The interest rate stuff has been a bit challenging, I imagine, but rates seem to be coming down. Same reason why the stock market's flying, right? Is teaching others about trading count as a job? Absolutely. Totally does. However, I will say if you're considering becoming some sort of mentor or offering some sort of services, here's my opinion. And I think it should be pretty obvious, but it's not. You should be able to prove that you're actually profitable. And you'd be surprised how few notable figures have ever proved anything in trading. So many social media people have never proved a dang thing about their abilities in the markets. They just talk the talk. How does this news affect the current market? So anyways, yeah, final thoughts on becoming some sort of trading coach or things like that. If that's something you're looking to do, I just think you should be able to put up a track record, period. I mean, a year plus of public performance on a third-party site or brokerage statements, login, that sort of thing. Show it because it'll add to your credibility and you'll shine amongst the stars of, fake gurus. Okay, so CB consumer confidence came out 110 compared to 104.6. That's pretty good. I mean, this is like a consumer read, right? How is the consumer feeling about things like that? So level of composite index based on surveyed households. This is a financial confidence is a leading indicator of consumer spending, right? The consumer being healthy is really important for the performance of businesses and also the economy. So this survey is about 3,000 households and rates the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So a better than expected reading here. It's probably going to cause stocks to pop a little bit, as we've seen, which is good. So S&P up on this news. Probably not good for gold. I'm just going to say, because again, remember that the economy being better than expected is not actually a super positive thing for gold. Gold typically does well when the economy is shaky and you're seeing even perhaps recession fears. That's when gold really rockets. So this news did not necessarily help the gold bulls. It kind of propels the indices bulls. The dollar index is it's slightly down on this. Which actually in some ways makes sense if you think about, okay, economy hanging in there, but inflation coming down. Fed doesn't need to rate hike, but the economy is staying relatively decent. That sounds Goldilocks, right? And Goldilocks, what I mean by that is not too hot, not too cold, right? The old, childhood story, which is exactly what the stock market wants to hear. Goldilocks, Goldilocks, Goldilocks. Are you a full-time trader? No. If I was absolutely just a full-time trader, I wouldn't be streaming on YouTube. I have a business. I build software tools at the end of the day. I also make money from YouTube ad revenue. I do genuinely trade. That is a portion of my my income, but I do other things as well.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.